Next up, I want to bring in Scott Bauer, CEO of Prosper Trading Academy. Scott, before we dive into some different asset classes like we talk about, I want to get your reaction to these latest retail sales numbers. They came in better than expected. You had the previous month revised higher. Does it point to strength with the consumer in your point of view, from your point of view?
Yes, especially that revision. I think that's the number that we really have to key in on because things weren't just revised, very, very small number. We're seeing massive revision. These are really, really big revisions. So yes, the consumer is still spending. And, that puts the Fed in a little bit of a quandary here, especially given all of the other strength of the eco data that we have seen recently. I was just checking CME FedWatch to see what the probability is for a December cut. It's still around 60%. But beyond that, going into 2025, we're starting to see those probabilities really go lower based on this economic strength.
It's true but even the probability for December shifted. When you looked at it earlier in the day yesterday, it started shifting by the time Powell spoke.
Yep.
Much later in the day. And the odds before he spoke was more than 80% of seeing a cut.
Yep.
And to even see that pullback from where the odds were before, I feel like there started to be question marks happening even for December.
I think what this tells you is that we don't know, and the Fed doesn't know really what the outlook is. And we've seen this play out before. We've seen these rapid shifts. We've seen these rapid changes over the last year in what the Fed might be thinking. Especially that's why we're seeing all of this volatility in the bond market. Now that we're seeing the 10-year almost back up to 4.5, this is a level we really need to watch to see if the equity market starts to really give some concern here.
Is 4.5 the level where the equity market would become a little more skittish?
I do believe so. And it's not just a psychological number. It's really the number that we saw, the 450, 455 area the last time it was up here, where the equity markets had some problems. And now you're looking at an equity market that is even at loftier levels. So I think that is something that we really need to monitor closely here. On the good side, right, it's not all a bad thing. On the good side here, we do have an optimistic, robust economy. Regardless of what the outcome is with interest rates here, the consumer is here. The consumer is going to continue to spend. And I think this paints a very bright picture for retailers coming up for the holiday season.
All right, let's talk a little bit about impact to various asset classes. We'll talk about gold. Gold is, kind of trading flat at the moment. It's been moving around, maybe a little bit higher right now. At my last check, it was just a touch higher, but it's been under pressure this week. What are the contributors that you're seeing? Is this about the path of rates?
There's really two big things. First, you've seen the dollar rise about 6% in the last couple of months. That is historic to see the dollar strength like that. So typically, if we had seen a move like that in the dollar, you would have seen a much bigger drop than what we have in gold. So that's number one. Number two, I think with the animal spirits that you're seeing in the crypto space, especially with Bitcoin, maybe some of the inflows that we're seeing into the crypto space are because people are just taking profits out of gold. Don't discount gold. Don't count it out. I think this is a great buying opportunity.
Okay, so this might be a potential buy the dip for gold. But let's talk a little bit more about what we've been seeing with the dollar. It's flat so far this morning, but should we expect a resumption of the trajectory and strengthening of the dollar?
I think we're going to see it moderate a little bit. I mean, we have seen rates go from 360, almost a full point, 360 up to 4.5, basically, as the Fed was cutting. So that certainly plays into this dollar strength here. And then you also see other central banks, other currencies around the world. They are obviously not in the same position that the U.S. economy is. So most other major central banks are still very much in a bearish camp, in a very dovish camp about lowering rates. And we're extremely, extremely questionable as to what's going to happen here. So you have this influx, if you will, of incredible economic strength here, and the dollar compared to other currencies is just dominating at this point here. I do think that that is going to moderate a little bit. This 107 area, actually like 106.90, 107 area, I think is pretty critical resistance here. And I would not expect the dollar to continue on its rapid ascent like we've seen over the last several months.
All right, pretty flat right now, a little bit under pressure at 106.50 right now for the dollar. Want to pivot and talk about oil. We've seen oil under a little bit of pressure. Is this, in your view, a fundamental supply and demand kind of impact?
Yes, we've talked about that, and if you are able to remove some of the risk from geopolitics, from other things happening here, yes, the bottom line is this is supply demand. It is oversupply, and the demand, especially the numbers coming out of China, are just awful. We're coming into the lowest, peak season, if you will, of the year here in the U.S., coming into the winter season. So this is supply and demand. I would expect, barring any, critical geopolitical event, we're going to see 65 on crude here pretty quickly.
Okay, watching out for that level on crude. Not there yet. You're looking at crude right now off a little more than 0.5%, just above $68 a barrel, but 65 the level to watch, according to Scott Bauer, who's the CEO of Prosper Trading Academy. Always love to hear your insight. Thank you so much, Scott.
Have a great day.